So here's a question I was trying to figure out. When we're talking about stablecoins, if we're right here in the United States, okay, a stablecoin is generally pegged to the US dollar. What's the difference between just a digital dollar? Why would I go with a stablecoin that's backed by a company when I could just go with the digital dollar and just use it here?
So the main difference is really about the networks on which you're processing the transactions. So traditional banking dollars go through the banking network. The process takes typically a little bit longer. Here within the
like
US,
nanoseconds, right?
Well, it's not quite nanoseconds, but it's very fast.
Okay.
The big value proposition, the one that people are really driving towards, is cross-border payments. So there we can, if we move from like traditional banking rails to blockchain rails, like the crypto ecosystem, you're going to take that cycle time from several days and like tens of dollars to basically where we're headed is under a second, under a penny.
Okay. So I'm just going to lean on this for a second. So you're saying for cross-border payments, the cost is like 99% less. But I mean, I think a lot of us Zelle money, we Venmo money, is not that much cost in transferring money. Why is that savings worth the potential risk?
So there is actually very, very low levels of risk. All these companies, the Genius Act sets up a great regulatory framework. All these companies are backing their dollars with treasuries. So basically, it's not really any different from a money market fund. So you're getting, honestly, very, very low risk, and you're getting incredibly fast payment processing. It's quite transformational in terms of how people can use this stuff in business and personally.
All right, Maya, same question for you. I just want to give you a chance to answer this as well, because I think that's the thing a lot of us are trying to figure out. If a stable coin, especially if it's pegged to the US dollar, what's the real difference between a digital dollar?
Yeah, absolutely. Good morning, Frank. Good to be here again. Look, stable coins are kind of my my passion. I've started in them in emerging markets, and I think Paul is absolutely correct. I mean, they're a bit more useful, right? For businesses in emerging markets, they offer a faster and a cheaper way for cross-border and holding dollars in a place within stable currencies. And really, it's a crypto's working capital, essentially, for right now. There's about 10 trillion stable coins, right, and transactions that have taken place on the trader side, and about 1 trillion actually people using it around the world in emerging markets. So I think that's only growing.
Okay. Maya is absolutely right. One of the things that's really driving it is it's in emerging markets. The Americans, we already have dollars. People in emerging markets don't, and they really want dollars.
Okay, I understand it's an emerging market case. I want to focus on the U.S., but I mean, I think this might apply to emerging markets as well. Maya, I'm going to come back over to you. When it comes to stablecoins, even ones pegged to the U.S. dollar, we have seen some issues. With UST, we saw it depegged from the U.S. dollar. Circle stablecoin was depegged. It was brief. It was brief, related to the failure of SVB and some issues the company had with that. We know that a digital dollar is backed by the faith and the full credit of the U.S. government. How could a company compete with that level of security?
I mean, look, I think stablecoins are just at the beginning, right? And I've been part of this industry for the last 10 years. And I think you have seen that these were kind of temporary dislocations and not really systematic cracks. And that kind of tends to correct fast as the liquidity returns. And so I would say, a little bit of patience in these things is really important. This is still a very new technology. We've just had the Genius Act pass, which means, Frank, that you've just started to get, people feeling comfortable of putting money on these rails and really using them because, you have the regulatory checks. So I would say this is, this isn't a systematic crack in a stable coins. This is just simply a bit of time for development of this technology.
Okay, so you guys both, you agree right here. You see a number of use cases. Paul, I'm going to come back over to you. We're talking a lot about the use cases and who can use it and the benefits. I think it's also important to note, you're saying all these stablecoins are being built on Ethereum. So is Ethereum going to see a big boost as more stablecoins get built on there, or is it just simply a platform?
It is a platform, but the platform gets a huge boost because every time you do a transaction on Ethereum, you are using some ETH, the network currency, you're using transaction processing power. So it's becoming a place where if you want to have any kind of item that somebody wants to buy denominated in these stablecoins, you're also going to put it on the Ethereum network. And that's why we're seeing this incredible growth of Ethereum layer 2 networks. There's over 100 of them. It's all being driven by these use cases, everything from payroll to real world asset investing.
All right. Mike, coming over to you. We're talking about stable coins. Is there any benefit to holding them? Is this an investment, or is it just simply a way to conduct business?
No, so look, in times like this, when liquidity is tight, right, we've seen what has happened in the last, couple of days. I think we're not just with crypto. Look at the market, right? Liquidity exceptionally tight. Government is still on a shutdown. Stable coins really matter, Frank, because they give you optionality. They are a safe harbor with crypto ecosystem. Within crypto system, you can step out of the volatility really fast. You can hold stable coins, keep it as capital liquid, and you can be ready waiting on sidelines for when the market drops and, you know, come back into the market. So it is about flexibility, right? Stable coins give you an enormous flexibility. You can stay calm, you can keep the dry powder on the side and position yourself to move when really things start to shift.